Hi, everybody, and welcome to the weekly market wrap for November 10th, 2017. So I just wanted to touch base with what's happening in the overall market and what are the things that are driving it. So looking at what the insiders are doing, we're still seeing insiders stepping in and buying shares of their companies. However, we're starting, and this is an hourly chart on the S&P or the Spider ETF that tracks the S&P 500. And what you could see here on the hourly chart is from October 27th almost right through to today, November 10th, we have gone up and down, but we really haven't made much progress in either direction. And that's really a change from where we've been in the past. And one of the things that I was talking about in depth last week was the tax reform and how that's a big deal because a lot of this stuff is priced in. And if we see any sort of hiccups along the way, the market's going to react. And that's exactly what happened on Thursday. We gapped down lower and even went lower from there based upon the fact that people were starting to have to digest that these tax cuts for corporate won't actually come until 2019. So it was supposed to be 2018, and some people were even talking about a uh, kind of a situation where they'll go back and make it retroactive, but it doesn't seem to be the case. And we'll see how this whole thing gets ironed out. But the good news is that it looks like it'll go through. When I say good news, I'm not talking politically. I'm just saying good news for the market is that it'll look like it's going through. So as time goes on, the market doesn't want any surprises. So what we'll do is we'll continue to monitor that because that was probably the biggest piece of news this week, which was what was the Senate's markup and how did it look compared to the original House bill, and what is the bill going to look like when it actually does get passed. So the first thing is, if you're a market bull here, you want the bill to pass. It doesn't matter what's in it, what it does. If that bill does not pass, it's going to be a trapdoor, and it's fine. I mean, if it happens, it happens. There's nothing we can do about it. We'll just react to what's happening and not necessarily try and predict it. But that is the risk to the downside. The other thing is that we are getting close towards the end of the year, which is what I've touched on in the past couple of weeks. And unless these professional money managers are happy with their results, they're going to start putting themselves in a position to catch up or play catch up and hope the market continues to grind higher. So that's kind of what's happening right now. This week happened to be the first down week in 9 weeks. So essentially, we had 8 straight weeks higher, and this is a daily chart that you're looking at now. And then all of a sudden, for the first time, we actually closed the week lower than where we ended the week last week. So doesn't necessarily mean it's terrible. It's just what it is. It doesn't mean we're going to crash. It doesn't mean anything. It just means that we've stopped making higher highs at this moment in time. We could resume, or it could be the start of something. If you knew that, you probably wouldn't have to work much longer. So we're going to have to try and continue to just react to what's happening. Um, and as the market gives us winners, we'll take them off. And then when the correction eventually does happen, we'll have taken off a tremendous amount of winners as we already have. The other thing that I wanted you to see, this is from a Twitter feed, which you'll see. This is a daily chart of the unweighted average of liquid stocks. So I know it's a little bit difficult to see, but this right about where my mouse is where October starts. And what you'll see is just a lot of chop, highs and lows kind of staying in the same range. Now, the S&P 500 is a weighted index. The Dow Jones Industrial Average is a weighted index. It's not weighted by anything but the actual market cap of these companies. So what winds up happening is that if you take a look at the S&P 500, the bigger the market cap of the company, the more weight they're going to have either up or down for that particular company. So for example, Apple is going to hold a lot more weight than a smaller S&P 500 company like a Goodyear tire. Okay. So as time goes on, what you're going to see is that these few companies in the S&P 500 that are bigger, that are continuing to go higher, they could drag the market higher. And that's what market breadth is called, is when if the market breadth is weak, it means most of the companies aren't doing well, but a few are, and maybe that's the difference between weak market breadth and an actual strong stock market. Now, I don't love looking at this indicator of how the numbers of stocks are doing, because what could happen, and I've seen it happen before, is that you could have stocks being held up, or the indexes being held up by three or four stocks, and then all of a sudden the ones that were weak start to catch up, and it even makes for a stronger market. So this flat period where you see here, it's not a reason to sell or do anything. It's it's something to make a note of, to say, hey, you know what? The market isn't as strong as it was, let's just say, from August to October, and it's something to make a note of. So you put this together with the fact that we're not making higher highs for the first time in 8 weeks, and it's worth noting it's probably not worth doing anything because the market hasn't actually done anything terrible yet. So that's what's happening. A little more cautious than last week, obviously, just because we're starting to see a flattening out. And we will continue to stick with what the insiders are doing. Keep your risk tolerances where you're comfortable. And if you get stopped out and you see the market continue to go lower, well, that's the reason you have the stops in there. You just don't want to get beat up too bad, and that's the whole goal. You don't want to take that huge loss because you're sick of getting stopped out, and you're in a position where you can't trade anymore, you can't invest anymore because you lost too much money, you don't have the stomach for it. So you want to keep those losses small, keep paying attention to what's happening with the insiders, keep paying attention to what's happening with the overall market, and I think you can develop a really good edge with that. So hope you guys enjoy the weekend, and I'll definitely get back with you next Friday. Enjoy. Thanks.